The inverted hammer, as you would expect, is simply an upside down hammer pattern. This is a bullish candlestick that indicates reversal and must appear in a downtrend. It must have a small body that can be black or white, have a long upper shadow and contain little or no lower shadow. And an inverted hammer in an uptrend is called a shooting star. So this candle pattern is said to be a reversal buy indicator in a downtrend because it shows that buyers have started to come in. They haven't been able to take control yet, but they are there, so momentum in the downward trend could be slowing. Generally, the inverted hammer must have a candle length that is more than twice as large as the body, and the upper shadow should be more than 2/3 of the total candle length. Here's an example of an inverted hammer in Halliburton, HAL. So we have the inverted hammer written down in code so we can test the pattern on our watch list of markets. So in this case, we're going to go long on the close of the inverted hammer and we're going to hold the trade for 1, 3, 5 or 10 days. First, we'll test the pattern on a watch list of 21 different markets, and then we will test on a watch list of 100 individual US stocks. So as you can see from the first table on the left, buying the inverted hammer on the close and then holding the trade for 1 day produced a profit on both tests. We got an average profit of 0.17% across our 21 markets with a win rate of 56% and an average profit of 0.25% across our S&P 100 stocks with a win rate of 55%. Both results are better than our benchmark return. The inverted hammer pattern was also a profitable signal using a 3-day holding period. Buying the inverted hammer and holding for 3 days produced an average profit of 0.18% with a win rate of 54% on our 21 markets and an average gain of 0.65% in stocks with a win rate of 56%. And this average was based on over 1,500 trades. Looking at the 5-day holding period, the inverted hammer performed less well in futures and Forex, but again it did well in stocks. We saw an average gain of 1% in stocks per trade, with a 57% win rate. This compares to the benchmark average return of 0.18% for a 5-day holding period. Lastly, the inverted hammer also did well with a 10-day holding period. We saw an average gain of 0.44% in our 21 markets with a win rate of 54% and an average gain of 1.21% in stocks with a good win rate of 60%. Overall, these results are actually pretty good. We have beaten the benchmark on every test and produced some good numbers with a healthy number of trades. The results suggest that the inverted hammer really might be a good buy signal. Even after commissions, there should be enough profit left over. The nice thing is that the average profit is consistent across all the tests, and it only gets stronger when the holding period is increased, and the win percentage is also strong. So the inverted hammer might just be a good pattern to look out for. Next up, we'll look at the shooting star. But before we do so, I've also included a graphic of the equity curve for the 10-day holding period on stocks, so you can get another idea of the performance.